Hello, everybody. My volume good? You may be experiencing connection difficulties. Please close any unused internet application. Everyone hear me okay? How are you, Kevin, Patrick? Turnaround Tuesday, how's everyone doing? Give me Y if you could hear me clearly.
Y.
Beautiful, beautiful. You can? Okay, thank you, Blake. So for those of you that are new, and it's your first time here, I don't know, I had some message. Here is a traffic light page, okay, for ForexAnalytix. So if you were driving on the road and there were no traffic lights, it'd be pretty chaotic, wouldn't it be? Hi, Amanda. You know, people would be cutting each other off. There would be more collisions. There would be accidents. So I use the metaphor that you need a traffic light page to navigate the roads in FX. Everyone with me? So say, for example, you were confused about the euro like I am right now. I don't know if I should be buying it here on this dip, looking for new highs, or that was it up there. But I don't have to rely only on my own view, my own thoughts. I can just go to the euro and click it here. And I could get a lot of different views. I could get the macro view by Stelios. I could get Steve's candlestick work here. If you're favor Elliott's, you know, Greg is great. So Greg would favor, I would say, here on a turnaround Tuesday, looking to buy it here. Looks like a little bit under 117.80. I think we're there. Okay, so turnaround Tuesday, I was looking at it, would probably be a fade on the dollar. And then you have confluence with Grega and Nicola Duke. And then if you really want to know what's going on here at ForexAnalytix, analysis is one thing, but it usually takes a lot of conviction for the team to put out patterns in play, because that's how we calculate our performance and what we're doing for people. Although I'd say the analysis is as or even more important as the pattern in play, but that's just my opinion. So yeah, as you can see, we have a lot of different patterns in play going from Blake and Stel and Blake and Grega. I don't see anything here by Nick right now, but so there are a lot of trade choices for you. And it's not a big risk to try it out and navigate it for a while. It's a buck. So you can click the link right there. It's right here in the room. Hi, Craig, how are you? David, what's going on? So click the link and risk $1 and invest in your trading performance future. That's my advice as your mentor today, okay? You risk 100 times that every time you click your mouse. Abdul, nice to meet you. Just don't get convicted by your convictions. Okay, well, that's my conviction, and I'm willing to be convicted by it, Ziggy. Yeah, Euro USD. See, Abdul, you want to know what to do. Well, you know, I'm thinking you could probably fade weakness today. That's my best guess. Okay, I'll get to it in a minute. So I really think that it's one of the better and maybe the best team put together on the net for trading FX as far as research, technical views, different disciplines, Elliott, harmonic, candlestick, macro, basic, technical. And even though it's basic, you know, sometimes the most basic things are the best things to do, ask Forrest Gump, right? So I want to start off with something I never talk about and I know nothing about, but I do know one thing. They call me Dale, Mr. 3 Drive. Look at the weekly on Bitcoin right here. So I know it's a lot of people are saying it was a mania here, you know, it was a mania here. But this is the first time all the way up that you have this type of 3 drive pattern developing in Bitcoin. It's not ideal because it was so parabolic that even though we're getting divergence, this is our second lower high in the RSI here. It's still pretty high reading at 77. But I would take this to heart. If you're a Bitcoin owner, take something off the table. I'm not saying short it because I don't even know what it's like to trade this stuff. And I know nothing about crypto. I'm trying to wrap my head around it from down here. I didn't get it here. I didn't get it here. I don't get it here, and I don't get it here. But I do get this. 1, I could count to 3. 2, 3. Be careful with Bitcoin. Everyone see the 3 drive formation there? Give me a Y if you see it. It's pretty classic. Take a picture. Sometimes they're closer together than here. And I'm not saying that from this point right here that it's not going to have to do some work and that this was the absolute high, but the form is there for at least not to be long. Pretty glaring? Yeah, you like that word, John. I use that, glaring. Okay, so turnaround Tuesday. Patrick said hello, turnaround Tuesday. Kevin said it. So everyone's into this turnaround Tuesday. Actually, my favorite choice for turnaround Tuesday, whether it ends up being turnaround Wednesday or Thursday or Friday, I think there's pretty limited risk. Top picking stock indexes here. Actually, we got to Steve's number overnight. Did we get to 60? Close enough for government work, 25.59.40. So looking for a turnaround in the indexes here. This is a weekly, but if you want to look at some glaring divergence here, I call this pretty glaring on the 1 hour. Here was our RSI peak on the 1 hour. Here was our RSI peak on the 4 hour. So all the long-term stuff is still has a lot of momentum, and I'm not saying we're going to have a crash, but it would be a natural thing for it to trade back towards 2,500, as Steve said, 2,490. So I think this could be one of the better trades for the week. You know, you scale in with minis. If you don't have a lot of money, you don't trade the full size. They have a mini. And you risk 10, 15 handles, maybe say about 75 versus 25.75 for the potential of 25.10 for 50 handles or so. So that's one of my favorites in the turnaround Tuesday camp. Yesterday, I said I thought Euro Pound could rally back to 89.60. Looks like that's going to happen here. And I can't even rule out a third drive up here. So again, I'd be careful here, look for 89.60. I think most of the team is pretty bearish. So you'd probably be looking for a sell here. Everyone with me on that as well? Euro yen got to a number I thought it could get to. I said between 40 and 50. Yesterday I said we could have risk on. Can't rule out this being an ABC back to 32.5. Still my contention that this is a descending triangle. Here's the look. Flat bottom. Right. Flat bottom. Descending line. Right here. I have shaky hands. So I think Steve's going to have to help me with my mouse here. Yeah, anyway, you can see that we're have a descending line. Look for about 32.50. The yen got to resistance and sold off. But if you want to hear the ice crack and you want a lower beta for a trade, perhaps you could try the Dixie up here. That this could have ended up being A, and this is B, this bounce. And if we had something equal, could take it down to 92 or so. So that would be a turnaround Tuesday fade for me. maybe you risk 50 pips on the dollar index looking for this to be tested initially, but your risk is definitely over this high. You're not going to want to stay short on closes back over 94. So on the Dixie, it's not that big of a risk, 50 pips here, to see if you could get one of these from in here. Any questions on the analysis that I've provided so far today? Okay, thank you, Manny. Euro trend, what's Euro T? Oh, the lira. Okay. Okay. Any questions on anything I've covered? And I know Steve mainly covers the board, but I'll take a question here before Blake comes on. I don't even have that up on my screen. Yeah, 1240, one more low at least. I know Greg will allow for one more low in the end. So it got back to 1240. Let me pull it up here. I think that's part of the scenario here. As long as we're not closing over 1250, I still think that we could trade 111, 110.50. So this will be your first warning sign that it's doing something right, closing over 12.5. And I think that you could fade it, especially if it turns out to be a day, Luca, where the dollar comes off. And if I'm right about, and Steve is right, and Blake is right about a correction in the S&Ps, that would be negative, UJ. So yes, I'm still negative, at least for one more break. And even a break to 110.50 does, you know, if you're a bull, it really doesn't change things that much, right? We have this huge move right here, 1076 would be some type of fib retracement. So why can't we trade down one more time before the blast? You're very welcome, Craig. Glad to serve. You know, it's our mission here in ForexAnalytix to build up and edify traders every day. So we wake up in the morning thinking, how can we help people that are listening to our voice? How can we edify them? How can we help them become better at what they're trying to do in a very difficult endeavor? So that's what I think about before we go live every day. I know the rest of the team has that mindset and mentality too. We're here to help, we're here to serve and add value to what you're trying to accomplish as a trader. You got to help us help you though. So you got to try out ForexAnalytix. You may want to consider a 6-month membership. So after this session is over, you could still be collaborating with Blake and Steve and me and Stelios and all the people in the other trading room. So, you know, just like Jerry Maguire, help me, help you. You have to be part of the service to get the full value of all of this. Hey, Stel, how are you? Blake, are you around?
I'm here. I think Stelios probably had his mic accidentally turned on there for a moment. How you doing?
Oh, good, buddy. How about you? How you feeling?
Good. I'm much better today. I'm much more in it. Yeah. So
yeah, you know, it takes a day to reacclimate after.
It does. Even on such a short trip, and it wasn't, you know, I didn't do a whole lot. But you know, I actually wanted to, you know, talk about the dollar, and you know, let's talk a little bit about what had happened yesterday. So yesterday the dollar, you know, rallied, and it kind of spiked up, and you can see right about here on the 4-hour chart, we spiked up into new highs yesterday afternoon. Yeah. We started rallying, that was you know, there's a report or comments that came out that John Taylor of Stanford, the economist out of there, had is in the running, if not the lead, for the Fed, right? So and John Taylor.
Is he a hawk, buddy?
He is. He's, you know, he's the old the Taylor rule, the Fed Taylor rule. So if you,
okay.
and Matt in our chat room, he put up this chart from Bloomberg, and you can see this is like a Taylor rule estimate where Fed funds rate should be versus Fed funds rate being right here, and you can see the difference. And so everybody's like, okay, well, if John Taylor is in the running and Kevin Warsh is kind of fallen by the wayside a little bit, well, that would mean more of a hawk would be, manning the Fed. And if that was the case, the dollar would be stronger, and that could really build the case for this dollar reversal here. And so, I mean, if you have John Taylor that comes in and he follows his own rules, and he thinks that the rate should be significantly higher than where they're at right now, the dollar could really turn the corner and start to rally, as people would anticipate that he would be more of a hawk. But he's also meeting with Janet Yellen, apparently, I think later this week or next week, and so it's still to be seen.
When is there any deadline for when Trump has to make the announcement? Is it he has till the end of the year, right?
Yeah, well, let me see. Hold on. I think her tenure's up at the end of the year. So Janet.
Yeah. Okay. So he could play. There could be all kinds of machinations between now and then before he names somebody. But he could do it early too, right?
Yeah. Yeah. So what looks like it is 14 to February 3rd, or the beginning of February 2014 was when she would be finished, right? So he'd make the decision by the end of the year. Then they'd have a transition period, and then we'd have a new Fed governor. But
Taylor would be the Grinch to steal Christmas, wouldn't he?
He would be, but stocks don't seem to care right now. I mean, stocks don't care about anything. So, but if rates were to go higher by 2 percentage points, let's say, on average, I think the market would probably take notice of that. I think
that would change some valuation models, don't you, bro?
It would, and stocks are more at a prove it. I want to see it before I believe it mode anyway. Right now, so I think the stock market would have to reassess if John Taylor was the Fed governor or was selected as Fed governor. But the dollar, on the other hand, I mean, that could be the catalyst that drives us higher. I got asked by one of our traders in our chat room, Chi. He was like, hey, are you less bearish the dollar right now? I'm like, I really don't have much of an opinion about the dollar at the moment. I really don't. I mean, I look at this chart, and longer term, let's actually go out to the weekly chart. So I know two things, okay? Two things are for sure as far as the dollar goes. We had a false breakout on the upside. We had a false breakout on the downside thus far. And so that leaves me kind of, do I want to chase to the short side? No. Do I want to get long? Not yet. I'm still, the neckline's really important here for the inverted head and shoulder pattern. So I myself, I'm kind of dollar neutral at the moment, but I see the case building for the dollar, and obviously if you throw John Taylor at the head of the Fed, that would be probably reason enough to be bullish the dollar, that alone. And again, I don't necessarily know if that's going to happen or not, and we don't. The odds are starting to, the report says he was that Donald Trump was very impressed with John Taylor over the weekend, I believe. Anyway, regardless, if we break out, we break out, and if we break out here in the dollar index, and then John Taylor is nominated, I mean, we are going to go higher in the dollar. We will jump up. will jump up a couple percentage points. I would be pretty confident of that, and I think that would weigh into being long the dollar. But I'm kind of in that prove it scenario too. I mean, Donald Trump is obviously, you know, with his rhetoric and his comments and his, you know, he's very back and forth and hot and cold, and so I kind of take everything with a grain of salt at the moment, and I'm kind of letting the charts dictate what I'm going to do versus me making an assumption at this point. Because if you know, there's that old saying, if you assume you're making an ass out of you and me, well, you know, it's in this market, I think you have to be very careful making assumptions. And I think that you have to, especially if you're dealing with the dollar, you got to let the dollar do the work, the charts do the work for you, and price isn't going to lie. So, or at least give you the best shot of not lying. You know what I mean? I think you need to look for that confirmation in the markets before making any good or any, you know, how should I say, more of a committed decision. And at this point in time, it's like I look at the dollar, I'm like, okay, well, I know where the dollar turns bearish. If you're looking at this chart, the dollar turns, see this dotted line right here? This is the shoulder. That's where the dollar turns bearish, and it turns bullish above this this little shaded area here. And until we get above there or below here, you kind of gotta be really careful with the dollar. And so my focus isn't on the dollar right now. My focus is on
other crosses.
Yeah, my focus is on the yen pairs. I mean, you know, and I'm still short the euro yen. I covered my Aussie yen yesterday. I am still short the Canadian yen. And I know that the Canadian yen below this 87 yen level gets I'm sorry, not 87, 88.75 level gets extremely bearish. I know the euro yen below 131.70 gets extremely bearish. And so for me, I'm just more focused on some of the crosses versus the outright dollars. You know, now I did short some dollar peso overnight, just kind of scalping around. I actually did it twice. I'm short right now, and I shorted it last night when I was watching the Colts Titans game, and I shorted, you know, the dollar peso up here. I covered it overnight. I got hit on a limit before we hit the support, and I'm kind of playing around with it just because I know we're at an 88% retracement. There is Stan in our chat room pointed out very, very rightly so that there's a big here. Let me make this into a different. The 99 or 1920 level is the 38% retracement on a much longer term basis, which is right above. I know we're extremely overbought on the US dollar Mexican peso, so I'm trading it to the short side very gingerly. I'm not very aggressive. I'm just kind of, you know, for me it's more like if I can chip around and make a few bucks being on the short side, because I don't want to be a buyer here. It's gone way too far, way overbought.
So even a pro like Blake does intelligence gathering in the chat room. So,
oh my gosh!
You know, yeah. So you know, we have guys in the chat room that this is not a hobby.
So just if you're
yeah.
Okay, I'm going to point out a couple of people that are in our chat room just so you can see them, and everybody are on Jumbotron here. Like I've been trading with Chi for the last several years. I know exactly how he trades. I know exactly how he thinks. And there's Ziggy. Oh, that's great, Ziggy. That's gorgeous. There's Ziggy. Ziggy's been around me for at least a decade. There's Eric. Eric's been around here for the last few years. There's Ron for, you know, like the last 14 years. I've been chatting with him. Joe for the last 3 years. She trades oil like it's nobody's business, and the Canadian. Then there's Amanda in there who's I've been following her around on Twitter for the last several years, and she's an ex-bank trader. There's Stelios. We won't talk about that guy too much. And everybody's posting charts now and all sorts of. There's Gene. You know, I mean, Benedict over here. I've known him for years and years and years, a longtime listener of the Wise Trade webinars, and Michael, who's been in the chat rooms for over 10 years. You know, so, and I could go, and Matt, who's been around me for the last 3 years. I know exactly how he trades, extremely smart. Stan, about 5 years probably, or maybe 4 years in the chat rooms. I mean, so I know a lot of these guys and gals around here. I know how they trade and I know how they think. And so when they post things, I cue off of it because they're an extremely intelligent group of traders. And then there's a lot of new guys and gals that we've picked up. Oh, sorry, Matt just posted that. I gotta, sorry.
You only have 2 eyes, Clay, okay? So
Yeah.
you have about 80 eyes working for you in there.
Well, you know, we work together, and I point out things that, you know,
working with.
Yeah, like hopefully here, matter of fact, I'm gonna do this really quick. I just covered my my dollar Mexican peso short for a couple, almost 400 pips. I just closed that out, and you know, hopefully you guys just took advantage of that Canadian or the peso, because if you go back here and past all this other stuff that we were all chatting with. I said, you know, we're talking about, you know, you asked about the dollar Mexican peso. I sold peso last night at 07. I think it's overbought because I sold it earlier at 08. I sold it at sold some peso at 06.85, and I just closed it at 04. So I made like 300 pips basically. So, you know, and you know, hopefully people get a little bit out of it from me too. You know, we all share ideas, and that's what we do in there. And you know, and that's all it is. It's all about, you know, just collaborating. And we have a great group in there. And when I'm not here, I'm chatting, and you know, and I'm chatting all throughout the day with these guys and gals. So it's great. But anyway, but I think we were talking more about, you know, the market as far as the dollar goes, and I just really don't have much of an opinion about the dollar. Like I said, I have more opinions about what's happening with some of these yen pairs, and that's what I'm kind of focused on right now. Also, you know, I have to point out the US dollar, or excuse me, that crude oil is up against that, you know, really, really key. This is a multi-year trend line. And the one thing I want to point out about this, the oil up here, is that if oil rejects, and it hasn't, it's kind of stalling up here. If it rejects up here and it starts to fall, I would think that is going to be the one thing that will boost, will push the Canadian down, which could boost the US dollar Canadian higher. And we got to watch this dollar Canadian, because this is going to be squeeze central. And I know we got import prices coming out in just a minute, but you know, we have this US dollar Canadian, and the 78% retracement comes in right here at 126.25. And I'm going to tell you guys that if this thing squeezes past the 78% retracement because crude oil starts to weaken, this dollar Canadian is probably going a lot higher, especially if you think about how the dollar is doing right now, and how strong it's been. There's a very strong likelihood of the dollar Canadian squeezing if crude oil can roll over. And that's something that I'm watching, you know, that's dollar related, that I'm, you know, just paying attention to. And the reason why I'm paying pretty close attention to that too is because I am short the Canadian yen. So if the Canadian goes down, the dollar Canadian goes up, the Canadian yen is probably going to buckle under some pressure as well. So those are, you know, that's something else that I'm looking at. Hey, really quick, we have import prices, I believe, coming out. Let's just take a real quick look here at the dollar yen. Stand by. We do have capacity utilization, industrial production, and we have couple, well, no, only Harker, FOMC member Harker speaking. We have dairy auction results that are coming out today that will influence the Kiwi. And matter of fact, I'm going to talk about the Kiwi just in a little bit before I let Steve take over. Steve, is Steve even here?
I think so.
I haven't even looked.
I think.
Oh yeah, he is. He is here. Hey, good morning, Steve.
Steve's always here.
Steve's always here. Steve doesn't miss a beat. If he misses a beat, there's something seriously wrong. Like I'll have to send I'll have to send people to Greece to go look for him because he doesn't miss a beat. Hold on, import price is coming out moments from now. Should have came out.
They came in higher.
Yeah, and that you would think would. Yeah, you would think that would. It came in at what 0.7?
Import prices 0.8. Sorry, export prices 0.8 expected was 0.4, and import prices 0.7 expected 0.5.
You would have thought that the dollar would have actually improved on that as inflation. This is inflationary. You know, this is the hotter inflationary data. You would think that the dollar would spike up a little bit, and I mean we moved up a couple of pips. You know, nothing really write home about. Okay, hey, Steve, I'm going to let you take over here in just a second, but I want to talk really quick about the Aussie New Zealand. Now, well, actually, we can talk about the New Zealand just in general. The Aussie New Zealand is sitting on pretty key support here. It's a little trend line support, and I'm watching it very carefully after this 618 retracement rejection from last week at the 110.25 level. But the reason why I'm watching it now is because we had some pretty hot inflationary data out of New Zealand, and the New Zealand, the Aussie New Zealand fell. It fell to 109, bounced back up again to 109, almost 109.60. It's come back down again, but I'm surprised that we have not seen. Oh, dollar is really firming here. I'm surprised we have not seen a stronger Kiwi. Now, we have dairy auction results that are coming out today, and if those dairy auction results come in a little weaker than expected, that, in my opinion, is going to spur some New Zealand weakness, because the New Zealand dollar didn't strengthen too much after the inflation data. So with the hotter CPI. So if that's the case, we might bounce off this Aussie New Zealand. What I'm trying to point, or off the support. What I'm trying to point out here with the Aussie New Zealand is, as long as we remain above 109, I think it remains, you know, constructive. And if you're long the Kiwi dollar, you got to be a little careful, because, like I said, if the dairy auction results come in weak, that's going to be something to pay attention to. Because if you look at the Here's the dairy auction results. We've been pretty steady recently, but we saw a downtick 2 weeks ago. We saw a downtick in dairy prices, and if they continue to fall, that could weigh on the New Zealand dollar, and that's something that I'm just paying attention to, because the Aussie New Zealand, I'd rather be long than short at this point. We held the 38% retracement. We're still holding. There's a lot of banks that are calling for a lower Aussie New Zealand price, and I think they could be wrong-footed. Do keep in mind we're in a much bigger, longer-term triangle, which if we just continue to hold this 38% retracement, if we come back and take out 110, we're probably going to break out to the upside. I'm hoping that's going to be the case, because really what I want to do here, what I really want to do here is I want to be long the Aussie New Zealand longer term, for, you know, the move back up to 120 is, you know, what I'm really hoping for in the future. And it's not going to happen anytime in the, you know, next week or so, but that's something that longer term, this is what I hope happens, and I'm trying to play that for a longer term recovery. So anyway, and I want to start building a position. I chipped into a small position already this morning, but I really want to be in a much aggressive longer term long in the Aussie New Zealand, you know, months to come. But that's, you know, it's got to start somewhere, and maybe it, you know, today is the day that it starts. I don't know, but I have to keep that possibility open. Anyway, how you doing today, Steve?
I thought you told me that you're going to put all your capital in Bitcoin.
Hello.
Yes.
Steve's here.
Blake.
He's gone. You got it.
Can you hear me, guys?
I can,
yes.
Buddy. Yes.
Blake?
I can.
We're fine. We just lost Blake. It's okay.
Okay. So it's okay. Because I started wondering, if my microphone works. Okay.
Don't be afraid. You can do you do this without Blake every day. You can do it, bud.
Oh yeah. Just what happened to Blake. Okay, I was about to joke with him, telling him that
I know how much you love him. I'm sure he's okay.
I do. Okay, I was about
How's
to
your
joke.
elbow? How's your elbow?
It's much better, thank you. Much better.
Good, buddy.
It's healing quite nicely. Okay, so Blake went through quite a lot of things. We have, we have a variety of pairs to have a look at. Let me first of all take the screen.
Yeah, someone's asking about cable. I think Blake can cover.
This is cable, euro. We're going to cover all that.
Okay,
and we're going to cover the USD yen as well. Yesterday I wrote at the chat room, actually, it happened that it was right at the lows. I just wrote a comment that, USD yen is right at support. And, yesterday I participated very little in the chat room because we had things and stages was away, but that was one of my few comments. And because this is the zone I was looking at, and we are rebounding from there. Blake also showed the DXY. I specifically mentioned in the next week's preview video that we do that having to do with the dollar. I have no clue what's going to happen next, simply because, and Blake more or less said the same thing, that he's neutral. I'm neutral, but I'm neutral in the very short term because simply, for me, I said it last week as well, everything is about what's going to happen with this zone, the 92.80, 93 zone, and 94.20. So as long as we're in between, I actually got myself a little bit of USD ZAR yesterday, have a position of USD ZAR yesterday. So my intuition still tells me that I should be at the short-term play, the US dollar very cautiously to the long side. I don't know, for some reason, I believe that this inverted head and shoulders is going to complete itself, but until I get a break above 94.20, I have no confirmation, so I'm really nimble with it. So, the whole game is about this. We got a little inverted head and shoulders that, actually timed this low there. And potentially now this inverted head and shoulders is just going to be the head of a bigger inverted head and shoulders. So unless we break below there or above there, keeping a neutral stance, staying on the side or being very nimble with positions is the best idea, at least with anything that has to do with dollar and whatever is correlated to the dollar. On the other hand, I have to stress out that we had made very clear that for Euro USD that was a key level, as key holding 93 was for the DXY, which is almost inverted. So we did hold that. Cable actually overshot our retracement target because I was expecting, a cable to retrace up to this area at the highs that we had at 32.60, let's say, but it actually overshot it. But it's now behaving, as expected once again. So, as long as cable holds that high, although I have to say something, tomorrow we have unemployment in the UK. And Stelio, what else do we have tomorrow? Do we have
the important one is the average
earnings?
Yes.
See where the gap is between.
Sorry, my internet went down. Sorry, guys.
Welcome back, Blake.
It's okay.
Yeah.
It's okay.
All right.
So, yeah, people are looking at the gap between that and inflation. So inflation is 3%, expecting 2.1% on the average earnings, and that's something that the MPC looks at a lot. So a very important number.
Yes. So tomorrow we have important data out of the UK that can actually affect the cable quite a lot. So keep that in mind. But from a technical perspective, this has been an excellent rejection from the 50% fib. And, it looks good for a continuation to the downside. Same applies to the Euro USD. I can't claim that these have been impulsive moves. They have not. Okay, but that doesn't mean that even within a correction, after such a huge uptrend, the Euro USD cannot push lower. It can. Okay, and the fact that it held the critical resistance zone here, that's around 118.50, is also a good sign. So, you know, having to do with the major pairs, the Euro USD, the cable, the DXY index itself, the USD yen. Let me go back to the USD yen. All of them have behaved very, very well from a technical perspective in a manner that shows that the dollar is not dead at the moment. Okay, it's still making a decent effort to put in a bigger rebound. Also, if we have a look at a few other major pairs, the USD CAD. The USD CAD broke below this ascending wedge, the ascending channel, but I had said that day, I remember that, okay, it broke out, but what's going to do with the 124.50 area? Because that has been the low there, that has been, you know, resistance there, support there, etc., etc., etc. It held it once again. So having to do with the USD CAD also shows us that the US dollar rebound is not dead yet. Same applies with the USD NOK. The USD NOK was almost at the precipice of breaking down once again, but it held this zone that we had indicated. And, you know, the channel as well. I mean, you know, you can draw it a little bit like this. Okay, so we still don't have any indication that the dollar is rebounding in an impulsive way, and that's something to note. But on the other hand, we have absolutely no technical reason to believe that the downtrend is resuming. So we need to be more patient. We need to give it a little bit more time. As I said, I'm personally looking to be buying dollars, but you know, in a very cautious way and shorter term trades than I usually like to take. And you know, we have to take it one day at a time until we most likely than not get either a resumption lower, resumption of the trend, or we see some kind of an acceleration of the rebound, which in my opinion, if that scenario plays out, then we're looking at a longer term rebound in the US dollar, because we know that positioning and sentiment are completely wrong-footed, and you know, that on itself will trigger you know, the snowball effect. I think they call it snowball effect. Yeah. So you know, I know that people are sitting in front of the screens and really want to do things, but having to do with the dollar pairs, as I said, take it one day at a time. Okay. Now, why did I buy a little bit of USD ZAR? Since I mentioned it, simply because we held the retest of this triangle. Okay, and I bought it actually when we rebounded above the highs of yesterday. Why? Simply because this is a morning star formation already. So, you know, I might even get rid of it today, depends on what happens to this zone. But, you know, I want to have something on the long side, and this could have easily been, you know, just a corrective move lower. Okay, I think more or less those are the things that I want to talk about before we start looking at questions. Let me see. Oh, by the way, there was a conversation here about Bitcoin, right? There was. I want to post an article here because I know that a lot of people don't understand how Bitcoin works, which is absolutely understandable. But okay, just posted, you know, a link, and you know, this it's a blog letter called a letter to Jamie Dimon, you know, like an answer about Bitcoin. But the useful thing about it is that it explains how Bitcoin works, and you know, how it's valued, etc., etc., etc. I think it's very interesting for people to read. Now, having to do, since you mentioned it, Dale, listen, I wouldn't be long Bitcoin any way you slice it or look at it, simply because if you see, Bitcoin is at a major confluence of resistances up here, major confluence of resistances. It's channel resistance, it's a fib extension target, it's another ascending channel resistance. So I think this is a very dangerous level to be long. I know the vast majority of people here are not involved with it, and I'm not involved either. I'm not even suggesting it, and I think it's in a bubble territory. But you know, for whoever is interested, at least you can read the article, so at least you understand what Bitcoin and the crypto currencies are, and how they function, so you can get a better idea of how to judge what they're worth, and let's say how you would value them as an asset class. Okay. Okay, let's go ahead and look at questions. Euro Turkish lira. Sure. I love looking at that kind of cross rates. Okay. Okay, the Euro Turkish lira, yeah, I remembered well. It's in a megaphone formation. It has already overshot it. Okay. It was also, I mean, I was also tracking this as an ascending wedge, which it has also overshot. And, it hasn't yet even closed the gap that we had here. So, it's obviously a battered down currency, the Turkish lira. I mean, at 2010, we were at 1.8 and currently we are at 4.4. So that tells you a lot. I mean, this is a huge, very, very, very strong down uptrend. And I really think that unless we see a break below there, 417. So, this is the bull bear line, this area here. Okay, unless you see a break above this area, below this area, sorry, you cannot simply be bearish. I understand that you can fade extremes. For example, fading that 161.8 was an amazing trade if somebody took it. But there is no reversal kind of conversation we can have until we actually close below 417. Okay, that's what I think about the Euro Turkish lira. Let's have a look at other questions. Hi Arif, have you missed? No, let's have a look at gold and silver. I know that you're not the only one interested in that, so I'm pretty sure that people are going to be happy to. Okay. Okay, listen. What I don't like about gold and silver, if I was long, is first of all that they tagged the target I had as a retracement target. It overshot it by just a little bit, and we seem to be resuming lower. Okay, so gold, does not look constructive here for me. I mean, we got rejected at an attempt to close above 1300. We actually closed one day, but the next day we got, we got rejected and we moved lower. As I've said, the medium-term trend is neutral. We've gone nowhere. We're chopping around both in gold and silver. And the way I look at it, if I wanted to do something, I would probably be short instead of long. But currently, I'm just staying flat and doing nothing. The same exact thing as you see, because it's the same kind of chart pattern applies for silver. So for both the metals, I would be cautiously bearish. Okay, and simply, Greg, I think, put it in the best possible way on Friday, that said that they are uninvestable at the moment, untradeable. That's what he said, because there is no medium-term trend. They're just chopping around. And I totally agree. And it's okay. It's okay. You don't have to trade it just because it's there. I mean, they're producing like strong moves on both directions. And in essence, they haven't been going anywhere. So why would you want to be involved with them? Just look for better opportunities out there.
I just saw the movie Goldfinger. Goldfinger. He's a man, the man with the golden touch. Don't trade it or touch it. I know. They let me out for the week, okay, buddy? They let me out.
No, actually, I admire and adore your enthusiasm and youth. I used to do a James Bond imitation in LAR, where I'd put on Goldfinger and from the camera, I'd, sneak around. But by the way, since we mentioned it and Luca mentions the yields, I have to say the following. First of all, the treasuries got rejected, or at least that's how it seems, before they even reached the 38.2. So this scenario that we were looking for, some kind of rebound, I specifically mentioned that it can stall at 38.2, it can stall at 50% fib, it can even go higher up to 127, which I didn't think it's likely. But if we get a break below this channel, things become very clean and very clear because then we're resuming to new lows.
Would you
But-
call this whole pattern from the beginning of the year, Steve, corrective, and
Yes.
the breakdown?
The overlapping nature
Yeah.
is very, very distinctively corrective.
Okay,
very
and it was impulsive from the election down to the low.
There's no doubt about it. I mean,
Okay.
if you see the move on the left side of the chart, there's
Right.
no question that this is an impulse, right?
Right.
Okay.
Big money to be made there in the coming months. Big money.
Yes, but look at this divergence, Dale. While the treasuries seem to be resuming to the downside, okay, of course we need to break this trend line to have full confirmation. Look
Yeah.
at the bunds. This
Yeah.
is also a driver that can get Euro USD lower. Okay,
Yeah.
because look at the glaring divergence. The bund
Yeah.
actually today posted a higher high, although it's getting rejected now, but posted a higher high from here.
Cleaned
And
up
look
stuff.
again at the treasuries.
Yeah. Oh, yeah. Treasuries
So-
are weaker. They're leading it.
Yes. So this differential that we see here is also a driver that can lead. Let me go back to it. That can lead to further weakening of the Euro USD. Okay. So keep that in mind. Let me read the complete comment from Luca. Gold may have trapped quite a few longs with a rally above 1300. I agree with you. 10-year yields cracking 2.6 fast and furious. Maybe the one thing that brings stocks down. Trump appointing Taylor would be very contradictory to his low rate stance. Market would be puzzled. I agree with that as well. Could you look at gold? Yeah, we did. Another question for gold. Again, we did. They're enjoying your singing, by the way, from what I see. Is gold at a good level to start building a long position on dips? I think, Angela, I think I answered that directly. I think that this is not the time to be involved with gold one way or the other. If you're asking me if I would be a buyer of gold to buy and hold as an asset, the answer would be yes. Okay, I already have some gold, actually, physical gold. But if you're asking me if I would trade it at the moment to the long side, the answer is no. The article about Bitcoin is on the, I know that is on the chat, so I've put it on the chat because I see people asking. You know something? I'm also going to tweet it after the webinar is over. So if you're following me at Vulgi, it's my handle at VULGI. I'm going to tweet it as long after the webinar is done. I think it's very, very informative. At least, you know, you'll get to understand a little bit more the dynamic of how cryptocurrencies work. Luca is talking about the pound Kiwi showing reversal signs. Thank you for reminding me, Luca, because I wanted us to go over the 3 euro crosses and the 3 pound crosses, and I'm going to do that right now. And we also have a question about oil. Okay, let's look at oil and then go for the crosses I talked about. Okay, nothing has changed in my view on oil, simply because I remain constructive. And that's the reason. I have nothing else to say. I was monitoring at this down sloping channel as a corrective potential to produce a corrective potentially move. It held the 49 level. And I'm still looking higher towards 53, 53 and a half. So nothing has changed. Okay, I remain constructive. Okay, let's have a look because we have some nice opportunities in the euro crosses and the pound crosses. So we have 6 crosses to check. So let's have a look at them. Okay, euros. I don't have much to say about it. We talked about it in common with Blake yesterday. I see the potential of a flat top triangle here. And we're currently above the support, below the resistance, so I have nothing to talk about. Although, if we do break below here, then we potentially have this double top formation in play, and that's going to be a bearish development, unquestionably. Okay, Euro Kiwi. Euro Kiwi, I'm monitoring this ascending blue trend line. I think that the fact that we got rejected from fresh highs is obviously not a good sign. But on the other hand, I can't dismiss the fact that we have been moving higher since February, and we still even haven't posted a lower low. So I cannot turn, turn bearish yet. Okay, I'm monitoring this low and this ascending trend line, and let's see what happens. I remain. If I had to do something, I would be still a buyer. Okay. If I was forced to do something at the moment to either sell it or buy it, I would be buying it. Although I'm not doing so because, conviction is low. Although the pair from the euro crosses that I like more at the moment is the euro CAD. Simply because this ascending wedge kind of formation looks like it's very, very likely to break down to the downside. So this is what I'm monitoring, and I might actually take this trade if we close below 147 and look for a move towards this zone once again, which is, let's call it 143.30. Okay, so the EuroCAD is the one that's closer to giving me a signal to trade it, let's say. Okay, let's go to the pound crosses now. Okay. I made a specific mention to the week ahead video, the next week's preview video that we do every Sunday on the pound Aussie, simply because the pound Aussie can be interpreted in one of two ways. One, it's a triangle after an impulsive move higher, which can, if it breaks to the upside, it obviously will lead to continuation to new highs. On the other hand, somebody can see this as a head and shoulders formation, in which case the triangle that we mentioned, its support is the neckline. So we haven't had a break of either the resistance or the support. It's very likely that with the data that are coming out of the UK tomorrow, we will have a bigger move that will trigger something, either going back to the resistance or breaking below the support. So I'm monitoring this formation, and we still don't have a trade here. But let's go to the GBP CAD first, because I want to leave the pound Kiwi for last. Okay, the pound CAD can also be viewed in the same way as we did the euros. I mean, you can view this support zone, as a horizontal support zone as it is, and then look at this descending trend line and say that, okay, if I break above there, then it's a continuation. On the other hand, if I break below here, things don't look good. Okay, as simple as that. Now, let's go to the pound Kiwi, because the pound Kiwi, our friend Luca is right. The pound Kiwi is trading in a triangle. We momentarily, pushed below it earlier today, just before the webinar, actually. And we're getting very close to the point that this thing might break to the downside, and then things get more complicated. But unless or until that happens, it's still in a triangular formation, and if it breaks to the upside, it looks very, very good to move off to 189.50, which is also like a major resistance area of a like large bottoming formation. Now, on the other hand, if it breaks to the downside, I wouldn't be outright bearish the pair, but I would definitely be staying on the sidelines until I determine what's happening here. Because theoretically speaking, I mean, it can even move all the way down there and still not be bearish. Okay, but I would definitely be very skeptical afterwards. So this is what I see with the pound Kiwi. Let's see if we have any. Ronit is posting a chart of the Eurobonds. I love this actually. Yeah, this looks like a although this is a very, very, very long-term view, a monthly long-term view. I know it's like extremely overbought. There's no question about it. No question about it. But it doesn't really help us because these are monthly candles. So I mean, things can transpire from here that in a weekly or a daily scale, they will take a lot of time to happen. There's no question that they're overbought in the long-term charts.
Look at those circles.
Some kind of Fibonacci that has to do with, actually Ronit will explain to us, it's some kind of Fibonacci, but I don't know exactly how the center of the Fibonacci area is determined. I mean, how do you determine which is the center of the circle here?
He's very esoteric. You know, he said Gann went to India to learn a lot of things, and that the Indians were
Fibo-arcs, he says,
responsible for building the pyramids. You know, their culture is, you know, may have been the birthplace of a lot of this stuff that we call technical analysis. So he sent me a lot of stuff on it. Pretty interesting.
Actually, I'd like to see them as well. I have a request from Arif to have a look at copper. Sure. Okay, copper. Copper, we timed the top of the copper quite nicely. We then got the move lower. It actually more or less held the first zone we had indicated here. I was then expecting that a rebound and one more push lower before higher was more likely, but that I didn't get right. And it was more than obvious when we actually broke, you know, it's very nice, and it also helps in Elliott waves. When you see a move that channels very nicely, like it did here, you get an indication of when the move becomes impulsive when you actually penetrate above this channel, which is exactly what happened here. So this is another impulsive move that has started higher. So Arif, I don't know if in the very short term copper has stopped here, but at some point, what I expect to see from copper is something like that. So if you're asking me if I think that this might be a longer term top, the answer is absolutely no. This looks like a third wave to me, which means that we should at least have one more push higher after a little correction. Okay, which doesn't mean that the little correction is going to start from here. So simply put, no, I don't see us being very close to a top in copper. I had warned plenty of times that this move was impulsive, this move was corrective, this move was impulsive, and I expected that the move that would follow would be corrective, but I expected the move that was corrective to produce one more push lower. In that case, I would be a buyer. Didn't follow my plan, that's why I didn't buy it, but I was actively looking to buy it. Unfortunately, the corrective structure, you know, initially fooled me. But it's okay. I'd rather not participate than participate in something that, you know, doesn't convince me.
Don't expect perfection. Don't expect perfection at the crap table. So we do have a guest, which is nice, huh? And no cancel. And Matt R is in the house. So great analysis, as usual.
Enjoy the interview, Dale, and see you all tomorrow.
Okay, thank you, buddy. Everyone give Steve a round of applause. And Matt, I see you in the room, so I'm going to make you the presenter, and we'll be able to hear your voice. And there's a screen share option for you as well, if you want to show some of the things that you're looking at. And appreciate you showing up here to edify our community.
Okay, can you hear me?
Can, Matt.
Okay, good.
All right, so very nice to meet you.
Nice to meet you as well. I'm not sure when you started following me on Twitter exactly, so I don't know how long you've, how many months ago.
Okay.
Do you remember when exactly?
You may want to turn your volume down in the room because I'm echoing.
Okay, let me, I'm actually on my, I'm using my Android phone for this right now.
Oh, okay. All right. So do you have a screen to share?
I actually do not, but that's fine because what I'm going to be talking about is really more fundamental than technical.
Okay, buddy. All right. So out of the gate, and I'm going to have to just ignore my echo. What is behind your handle at Panama Orange? Because I know in the 60s, I knew what Panama Red was. What does Panama Orange stand for?
Yeah, you know, I was actually helping a friend who collects records. I think it was that record that I saw. That was part of the origin. I've always used musical references or musical lyrics whenever I've had handles or names online or email or whatever. Just a habit I have where everything's some kind of vague musical reference. So yeah, you did kind of hit on that with the Panama Red.
Okay.
Not that I'm a particular fan of that, but that's kind of the.
All right. So you just changed the color on it. Okay.
Yeah.
All right. So tell us, you have no axe to grind because I've been to your Twitter account. You don't have a website. You're not selling a service. Tell us about your journey into the trading world, how you got started, possibly who influenced you. Did you have a mentor? Tell us how it was for you at the beginning and how long you've been at it.
Well, this has been almost 8.5, 9 years now. And what I was doing before this, I was actually on the police in New Orleans during Katrina from 2005 to 2007. And I was there for the storm. I joined, this was like April, May, before the storm down there. And actually before that, I had a college degree and everything, but I went and got a polygraph degree, and just believe it or not, after I got laid off at another job after 9/11, which I was working ticket desk at Chicago Airlines doing customer service, and I just heard about this polygraph course you could take, this very unique college they had here in Illinois, and I did pretty well at it. And
that's my hometown. Are you from Chicago?
I've spent aside from the 2 years I spent in New Orleans, pretty much my whole life in Chicago. Yeah.
Okay. Hello, brother. Go Cubs.
What side? Yeah.
Born on the south side and grew up on the north side in Skokie.
Oh wow, yeah, that's literally like where I'm at right now. So
wow, see? Yeah. Went to Niles North and then NIU.
I went to a few Niles. I went to Northridge Prep, which was like one of the only Opus Dei high schools in the country, and then like those creepy villains that are trying to kill Tom Hanks in that movie Opus Dei.
Oh yeah.
What was the name of it? The Da Vinci Code, right? And also I went to for a year, my first year of high school, I went to Notre Dame in Niles, and really in both cases, well, more so when I was for 3 years when I was at Northridge Prep in Niles. We were right next to Golf Mill Mall, which I'm sure you recall, because it's like there's only a few big malls in the area. So
right. Yeah. Old Orchard. Right. That's what I went to.
Yeah, Old Orchard is much more upscale now, and Golf Mill is very dumpy.
Okay.
So
my old haunting ground.
Yeah.
So how did you move into the markets from giving polygraphs? It's probably a good background because you want to know if the market's telling you the truth or giving you head fakes. Did it apply at all?
Well, what happened was when I was on the New Orleans police during Katrina, after that, year and a half after that, I got in a car accident and I kind of messed up my neck kind of badly, and I figured, I'm going to leave that, come up here, go into business with a friend, buy a business, invest in real estate or something. And it's a good thing I didn't, because that was 2007, 2008, and I did almost buy some real estate at that bubble top, but I had no financial literacy back then, really. I mean, my college degree was not in economics at all. It was in film and TV.
It wouldn't have mattered. It wouldn't have mattered.
Yeah, it's certainly not mattering now, as I'm getting to. But the experiences I had in New Orleans with Katrina and everything, that definitely colored my view of sort of the fragility of systems and how poorly organized, how poorly prepared people are for situations, as we've seen in the financial markets, as we saw in 2007, as we're going to see again very shortly.
How about when you saw the recent hurricanes that happened? Was it kind of like a flashback to you, and looking at Puerto Rico, looking at what happened in Houston? Did you have flashbacks to Katrina?
To an extent, yeah. That was, I mean, the thing that really made Katrina bad was the fact that we were not prepared as officers for the storm. I mean, we didn't have a lot of emergency food. We didn't have a lot of supplies. That's why a lot of people left to go take care of their families instead of staying at their post. And once the radio system went down, everything the command structure kind of collapsed, which is really sort of the aggravating. You know, you hear about how most of the cops ran away. Well, about a third of them, about a fourth, between a third and a fourth did, but there was no command structure. So what you really had no idea. It was a complete mess. I was a little fortunate in that I was in the French Quarter area, and we got a hotel that we turned into a headquarters, Hotel Omni, which I believe is still like a 5-star hotel. Of course, we had no water, we had no electricity, so it was not like, I mean, it was miserable. We
So are you a prepper now because of that experience?
To an extent, yeah. Mildly, I'm not as severe, but yeah, I do try to have extra everything for a few months, just because I know from experience that emergency services are not prepping. You know, your local police department, your local fire department, they're not putting aside extra food, extra water. They're going to wait for that to come in from somewhere else if something happens. And that's just, you know, a function of they don't get paid very well. It's not something they're trained to do. When you go into the police academy, there is a part where, okay, go home and make sure you have 3 months worth of food and supplies and have them at your desk just in case. No, it's not something really any departments are doing. And it is funny that the lack of lessons we've learned from that. And to kind of segue into how that applies to trading and what I did. You talk about mentorship, how I learned. Well, initially what I did was in 2008, you know, I just fell into trading commodities. I saw the surge in oil and everything, and thought it was a good time to play around or learn how to trade them. And I studied a lot of different technical analysis books. I studied, obviously, I started with like the Idiot's Guide to Technical Analysis, and then, man, I have at least 5 or 6 books on the subject. And then I found that room, Pure Tick, which I think is still open. I still get ads from them, which was kind of expensive, but it was good education because the guy who runs that, whose name is now escaping me, by the way, but he actually studied under a lot of different mentors and took years to learn how to trade, had a lot of difficulty doing that, and he just trades the S&P futures all day. But it's an expensive room. I think Pure Tick, you know, even back then it was really expensive, and now it's really expensive, but it's good education. I'm not advertising for it. It was a good thing for me to start out with when I didn't know what I was doing. I kind of moved beyond that, but that was, you know, that was really sort of the last chat room I paid for. I did that for like a year or two. Then I kind of moved into my own trading, and I was trading through the 2008 meltdown in 2009, and that was a lot of craziness. I'll tell you though, the 2009
How long
crash,
did it take you to get good?
Oh man, I would say to get, you know, just competent, it took me 2 or 3 years.
Okay.
I'd say.
About the average answer I get. It's like an undergrad degree.
Oh yeah. I mean, especially because the market, starting with that crash in 2008, started acting. If you look at all the technical analysis books, they didn't really prepare you for how the market was going to behave in 2008, 2009, 2010, the flash crashes, the mini flash crashes. And we've had so many mini panics between 2008 and 2011, or actually all the way to almost 2012.
Well, I think the dot-com bust prepared you for 2008, just my opinion.
Yeah, I was in
You weren't
college
in it yet, though.
my last year of college then.
Yeah.
Yeah.
Okay.
And that's so it's a good thing I missed that, because I don't know how I would have traded that. I mean, that was, you either would have shorted early or you would have bought early. I mean, it was the 2000 bubble was like,
Feels like now.
yeah, like you're going to lose money no matter what you did. No matter how you're going to trade that, it was going to be a disaster and difficult. But 2009, I'll tell you, when I talk about fundamentals, I even though I've studied a lot of different forms of technical analysis, and one of my favorite sites for that is Bulkowski's pattern site, which is still up. It's still free. It has like 50 different chart
Who's
patterns.
that, Adam Bulkowski? He's in Poland,
I forget. I don't recall his first name. He's got a few books out. His website is free, though. Let me pull it up real fast on my tablet here as I juggle. But that's, different people kind of glean. I mean, I know how to use moving averages. I know how to use momentum indicators. I studied volume profile for a bit because actually when I was in PureTech, I heard about a conference going on down at the Board of Trade where it was like a 2-day conference, and different technical analysis and trader people came in with different, their different techniques and what they do. And someone gave a presentation on volume profile, which was really, I had never heard about. No one really talks. You never see it on TV or anything.
A lot of floor guys use that.
Yeah, it's very popular with some floor guys. And it works in high volume markets. It works very well. It's not something you can apply to like low volume or no volume or Bitcoin or something where it's all hidden volume and weird off. You kind of need to know. You have to see the volume for it to work. Obviously, it's a high volume thing, and that a lot of people. That's also a problem with technical analysis as well. Is people apply it to things they shouldn't be applying it to. Like I see people use technical and like moving averages and Bollinger Bands and things on levered ETFs, and I'm like, what the hell? You cannot chart a levered ETF. You have to chart the underlying.
Why not?
Well, in my view, you have to chart the underlying asset. If you a triple ETF, a quad, whatever, you got to go to the core and see what's the core thing that it's moving off of, because all those oscillators and moving averages and Bollinger Bands and they're all calibrated for normal movement, and when you're charting something that's levered like that, it really scrambles a lot of those signals. It'll give you a.
That's an interesting nugget there. Okay, so
that's just my own view. That I for example, that's why I like index trading, and I especially like, for the last few years, almost all I've done is trade precious metals. And I wasn't like a gold bull or a silver bull in 2011 or 2009. But going back to 2009 real quick, to finish a thought, and this is kind of important, I remember at the time there was a lot of panic about the economy in 2009, and I thought it was just ridiculous and overblown back then. I mean, I knew it was, because I live in Chicago and I get stuck in traffic all the time, and not at rush hour. I mean, 2 in the afternoon on like a Wednesday, nowhere near the city, and I'm bumper to bumper traffic. And I'm listening to CNBC on my XM radio in my car, which is something I got after Katrina, by the way, because after Katrina hit the city, all our radio stations were down for like 6 months or a year. But anyone who had a satellite radio had all the radio stations in their car. There was like no TV, no cable, but it's like if you put
no TV,
satellite radios.
No TV, I'd be looking for my cyanide capsule.
It was.
So.
But the 2009, the anecdote from 2009 is I was stuck in traffic and I was listening to Rubini. Rubini was on CNBC and talking a bunch of doom about this and that. Right. And I'm like, I'm in bumper to bumper traffic and I'm hearing how the economy is shutting down. And I'm like, what the heck? When I go to the store and I see lines, they look completely normal. Like the stores were not empty. The roads were not empty. I don't know what. So in 2009, 2010, 2008, that panic was just really ridiculous and overblown. And likewise now to the upside, the idea that the economy is just booming is complete nonsense. I mean, we know it's not, because retail sales have been flat as a board for years. I mean, consumer confidence is up, but it's been up for like 18 months. Whenever the stock market's up, consumer confidence goes up because they see the stock market's up on the news, and they think they're going to have more money in a few months because their boss is going to give them a raise and everyone's going to be richer. Because that's what we're taught is, when the market,
a lot of their 401ks came back, and their house values came back.
Yeah, and the funny thing is, people do not cash those things out at the right time. They panic sell them at bottoms and at lows historically. They do everything at the wrong time. But the current bubble we have right now, but you know what? Let me actually complete the thought on silver and gold. Okay, why the last 2 years have I been so into silver and gold? Well, we have a bubble on so many fronts right now. We have a bubble in bonds, in real estate, in stocks, obviously, but precious metals are kind of a way of shorting all these bubbles at once. It's like an ETF that lets you short multiple assets at the same time, which you can't get if you just buy SPY puts, or you buy the SDS, or you buy the SH, or the QID, or whatever. You're in that case, you're just shorting the stock indexes, the major indexes, which at these prices is not a bad idea at all. But if you're long precious metals, essentially you're getting short exposure to a lot of other assets. There's so many other things that could go wrong that could help you out that might not help you out if you just short stocks and the Fed panics and does QE3 or QE4, 5, 6, whatever. And that really is kind of the risk of shorting stocks, and that is the Fed. I mean, even before Yellen's weekend talk, which sounded a little more hawkish, just like a week before that, she was talking dovish again, which is insane with a stock market at like Dow 23,000, and the Fed is still giving dovish hints. Like, that is really, it shows you just how scared they are of the real estate bubble popping, as they should be, because our real estate bubble right now is almost
so your way to play any kind of hiccup or speed bump in the economy is being long precious metals. Is that correct?
From this point, only because they've had such an ass kicking since 2011, especially silver, but also gold. I mean, if you look at silver and gold since 2011, it was. I mean, I believe that crash. Some people say it was due to manipulation. I believe it was due to too much pumping and too much mania from like Zero Hedge and gurus on YouTube, and people just created a mania from silver jumped from like 30 to 50 in like 2 months, and then it crashed because it went up too fast. And it was completely right for silver to crash from 50 to the teens. Now, silver staying this long in the teens, though, that's just like, it's really got to the point where it's gotten just insanely cheap and ridiculously undervalued staying in the teens.
Okay.
But there's sort of this mentality that, well, this proves it's being manipulated down, and they're selling. Every time it goes up, they come in and they manipulate it. Well, no, the problem that happened was the stock market, like in 2013, 2014, it started to stabilize. Real estate started to stabilize somewhat. So at the point where precious metals should have started turning up harder, other assets that historically caused people to not look at precious metals, they went up at that time, and that's kind of what's kept gold and silver from moving up. But if you look at the down move from like 18,000 to 23,000, precious metals have actually gone up the sideways as the stock market's gone up.
Yeah, I mean, I've seen time periods where the stock market goes up and gold goes up. I've also seen time periods when the market goes down and gold goes down. So,
oh yeah, like 2008. Yeah.
Yeah. Go ahead.
But we didn't have that huge crash in precious metals for, what is it now, 6 years, 6 or 7 years, going on almost 7 years, before that 2008 crash. Now, if we had that already, if we had that preemptive, that the sentiment just being destroyed and the price being destroyed for so many years, then metals would have gone up much faster in the 2008 crash. But before that, the sentiment was people just weren't even looking at it. Like up until 2018, most people weren't thinking about it. They weren't checking the price. They didn't care. It was just not on the radar. And now it's on the radar as something they have absolute contempt for. And you see a lot of this. The best sentiment indicator in precious metals is, well, zero hedge, honestly, because it doesn't attract the brightest, especially the people in the comments. It does not attract the brightest people. It attracts very impulsive, very emotional traders. And it really gives you sort of the, whatever the average emotional trader is feeling. And pretty much what you see on there now is people just bashing precious metals relentlessly. And even on YouTube, a lot of the guys who are pumping silver between 30 and 50, they're all chasing cryptocurrencies and Bitcoin now. And maybe they'll talk about precious metals for 5 minutes after they spend an hour pumping Bitcoin and pumping Litecoin. So that, to me, we really needed to see that element rinsed out of precious metals for a bottom. And we did. We saw it completely washed out. And that to me is why the metals market right now at these levels is so healthy, because the speculative aspect is completely pushed out of it, and that really sets up a strong base for it as well. But
so, do you trade it or do you accumulate physical? You do both. Are there price levels that look attractive to you for getting long futures? How are you approaching silver and gold here now?
Yeah, well, in 2016, my trade was gold, basically. I first, if you look at the just a second here, let me adjust my
I'll pull up the gold chart. So here's 2016.
If you pull up like a weekly.
Yeah, I got it.
Well, if you look at their big low, and let me pull up an accompanying chart. I've got a tablet here to just.
Yeah, we bottomed at 1040 and rallied to 1360, and it was a huge move in miners. A lot of them went up 5 to 10-fold.
Yeah, now I'll tell you, I did miss the move in miners, but I was almost all in gold from when it broke under 1100. And then I stayed all in until it was above 1,300. And then I didn't get the exact bottom. I didn't get the exact top. I got pretty close, though. And I went, and that was all physical. And, yeah, the problem with miners is if you miss time an entry in miners and it goes further than you think, it'll wipe you out, because it's like a levered – miners are basically levered gold. When you buy GDX, especially GDXJ, it's like you're buying triple, sometimes even quadruple gold, which is okay speculative wise, but you gotta respect that if you get caught in a crash, it'll really mess you up. So that I had a really good trade in gold there, but here's the thing: my trade in gold was based upon my bearishness on the economy. Which, if you look at the macro economy, and there's so many statistical data points on this, it has since 2015 been stagnant in so many levels. So in so many ways, the economy's been stagnant. The only improvement we've seen are people dropping off the unemployment rolls because they're timing out and just dropping out of the labor force and saying they don't count anymore.
Or they're at fast food restaurants or Home Depot. So let me ask you this, Matt. It's great to go back over history, but I've been in the business a long time. No one cares what I did 2 years ago. It's what have you done for me lately? So I'm looking at 1284 gold right here on the weekly chart. We had a failure at 1360. It would look great over 1360. What's your take on gold now, and where do you think we're headed, and where would you be a buyer if you're still long-term bullish?
Okay, well, I vastly prefer silver here right now to gold. As far as gold, but not everyone can buy it.
I'll go the silver. Okay, here's silver, 1705.
Okay, now here's the thing. On gold and silver, I actually gave some targets on Twitter based on checking out the weekly charts. And this is just looking at a very simple, I hate to flip you back to gold because I like silver more fundamentally, but the gold, the chart pattern and gold is clearer. So it's a weird situation. The fundamentals are better on one, but the pattern is clear on the other. But gold, if it goes up, it's going to lead silver. So you could be bullish of silver while actually thinking gold has the better technical setup, which is kind of the case here. So if you look at the gold weekly chart and you go back a year, it's better if you go out and dial 3 years out, 4 years out. But the point is, on the weekly chart of gold, you see a classic bullish ascending triangle that's kind of a year wide.
Yeah.
And not an ascending wedge for anyone, because I notice a lot of people get the ascending wedge and the ascending triangle mixed up, and even I do sometimes too. But no, bull ascending triangle on the weekly chart with
There's a bullish formation. There you go. There it is.
And I
so
see
you got a flat top. You have a flat top at 1363, and an ascending triangle trend line that comes in around 1200.
The way I see the trend line is more starting. Let me zoom in on the chart you're sharing there here.
Yeah.
This is the one drawback of me being on a phone. It's going to be awkward when I look at the chart here. Hold on.
Well, if you're in the room, you could see my chart.
Yes, I'm trying to squint to see. Okay, if you could pull the trend line like half, make the trend line half as long. Like go back to that.
I know what you're saying.
Right there, yeah. Start there. Yeah, that's.
See, I'm a technical mind reader.
Yes, so that's more where I see it. That's more where I see it starting. So okay. I actually think we bounce a little before the trend line. I don't think we go through it. I don't think we stop just because.
About 1250.
I think we bounce in the 1260s. I could be wrong, but I do. That is my view. And I was even saying this weekend, the Sunday night when futures were up, that, hey, when silver very likely pulls back under 17, when gold, like yesterday before this drop, tonight I was saying, gold, high 1260s, silver 1670s, those are my targets that I think we're probably going to hit again. And I don't, I see maybe like a 60-70% chance we hit those targets again. We might not. I mean, we've been consolidating so long, and sentiment is so bad that it wouldn't surprise me if gold and silver just took off like rockets into the sky, really. I mean, but technically, I think 1260s, 1670s, very possible we see that again on a short-term basis. Now, the question, of course, is, okay, if I'm saying to buy physical, which I do think you should buy, how do you buy physical? Well, there's only two dealers I really like because I've called a lot of them, I've researched a lot of them, and the two dealers I like for physical are APMEX and SD Bullion, and their phone customer service is fantastic, and they'll ship, free insured shipping to your door. Well, at least APMEX is free insured. SD charges like a $7 flat rate, but their prices are a little lower than APMEX in a lot of ways.
What's your Matt? What's your address?
My
Just
email?
kidding, buddy. Just kidding.
Okay. I should.
All right.
Okay. Yeah. Just for the ambush, I know. But
well, you're a trained law officer, so you wouldn't be a good target. I'd say don't look for Matt. So okay.
Well, that's actually why gold, even though silver's cheaper than gold, even though silver will probably go up on a percent basis twice as much, possibly. For some people, if you want to get, say, a couple $100,000 into gold, it's going to be easier than getting it into silver and storing it, because you can.
Yeah, right. You get a hernia carrying around a silver coin bag, right?
Well,
they're pretty heavy.
That's the one issue. That's why 100-ounce bars are a good way to invest, because you can get them for about 50 cents over spot, 60 cents over spot, sometimes on sale for 39 cents over spot at like SD Bullion. And these 100-ounce bars, they're pretty easy to. They're heavy, but they're easy to store. You don't have to worry about scratching them up. They're not really designed for being shown off or their aesthetics. And yeah, there's the tarnish issue, but the thing about tarnish in silver is it happens at such a shallow layer. That's why you can pull silver out of salt water. There's shipwreck silver, and the silver, its mass is almost completely intact, because when tarnish hits silver, it hits such a tiny upper layer, like just a microscopic upper layer, and it doesn't go any deeper. So that you throw a silver coin into the ocean, it's not going to rust all the way through or vanish or anything. It's just going to a little tiny layer on the top. You can always clean that off. Right. That's one of the reasons silver, you know, it purifies water so well. They use it in a lot of water purification systems now.
Electricity, everything, yeah.
Solar panels, you can't.
Yeah, right. So Matt, I want to thank you for coming in here today, and your stand on precious metals is pretty high conviction, and I'd like to see it close over 1363, and we'll see the dollar. Do you take the dollar into account for it being the linchpin for what gold and silver do? I do to an extent, but a lot of the buying right now is coming from overseas. So ironically, when the dollar goes up, people see their own currencies going down, and that actually influences them to buy more. But I should give a shout out to James Rickards, because he's actually the guy, looking at his talks even in 2015, who turned me into a precious metals bull. James Rickards. Yeah, I know you know, people have seen him around a lot, but because before that, silver and gold were the domain of carnival hucksters and YouTube pumpers, and it was such a circus, and its reputation had gotten so sleazy. But then Jim Rickards laid out a very intellectual case for why metals will go higher, and you know, his target's $10,000 gold, but he you know, he's got a great resume working for the CIA and working for all these other things. But he lays out in a very intellectual way why precious metals are so essential, why they're so undervalued here. And so I do have to credit him for kind of, if it wasn't for Jim Rickards, honestly, I would just be trading the S&P and trading other things, and I'd be having a hard time with that, the way the market's been behaving lately, the total mania, which, you know, I think the market's going to decline at minimum 40% from here. Absolute minimum. From here?
Without even questions, the S&P. Okay. So the question is, you know, how people always say, well, how do you short? You know, if you can't just sit there and short. Well, if you're in precious metals, you're basically that's a good way of waiting it out while shorting, while being sort of a synthetic short, and you're not betting. You know, because if you're sitting there short against the market and Yellen or someone comes out with some new QE or some new whatever, you know, they'll blow you up. They can't really do that. You know, if you're in gold and silver and Yellen comes out tomorrow with some crazy helicopter money plan, you're going to do fine. you're kind of insulated. So you're not sweating what the Fed's going to jawbone or what dovishness is going to sneak out. Because I'll tell you right now, if they're dovish at 23,000 Dow, if they're little hints and whispers and things, my God.
Well, you know, it's only an opinion, and everyone has one, Matt, but I think there's a possibility that we enter a deflationary type scenario and everything goes down in the market, gold, bonds, and everything goes down. So until we take out 1360, I'm a little bit negative here, but you know, that's what makes a market, and I appreciate you bringing your viewpoint to our community today, and hope that none of your ideas are tarnished, and that you know, that you have a golden future, because it sounds like you've been through a lot. So I want to thank you. It's been great meeting you, and appreciate the time you gave us today, Matt.
All right, I tried to fit in as much as I could as far as education. Just the last thing to throw in is, yeah, I'm on Twitter and StockTwits. I have like 26,000 followers in StockTwits right now. Not to brag, just putting it out there as, you know.
Well, I hope you tweeted this. I hope you tweeted this interview to them. So they know.
I did. I did yesterday, and I'll do so. I'll do so again.
Okay, and
I appreciate you having me on. I really do. Yeah. So
you're very welcome, my trading warrior brother. I'll drop the video clip on this interview into your Twitter box later on today, and I'll tweet it out there for the Twitter sphere to see. Okay.
Okay, well, again, appreciate you having me on, and I just have to say, SD Bullion, APMEX, if you're going to buy physical precious metals, go with those guys. Their customer service is very good and friendly. Not bashing the rest, but those are the two that I trust. Really, the only two that I trust if you're going to buy physical metals, not the stuff you see on whatever on the Fox ads with Roseland Capital and all those weird.
Right.
I would stick with APMEX and SD if you're going to buy physical, and you should be buying physical. So.
Okay.
Okay.
All right. Well, thank you so much, Matt. Good hunting, and let's keep in touch and see what unfolds.
All right. Nice talking to you.
All right, buddy. All right, so that's a wrap for me, everyone. So we'll see everyone tomorrow. Good hunting, and remember, don't just count your bullion bars and your silver coins and your pips. Count your blessings, and we'll see everyone tomorrow. Adios. Thanks again, Matt.